morning. Hello and welcome to Money Control's live stream. You're watching Opening Bell with me, Lovisha Darad. Well, it's a brand new week. Yes, it'll be another holiday truncated week after we saw last week because we have the Maharashtra Assembly elections which is due on Wednesday. But yes, Nifty, that is hovering around the 200 DMA level, 23,556, and the GIFT Nifty is hinting at another subdued start for the equities. But if you look at the pre-open rates has been hinting at a green signal for the Indian markets, but we'll see whether or not it could sustain those moves. But we've had a mixed global handover. US markets that ended lower on Friday as investors digested Powell's remarks from the Dallas event. He said that they are not in a hurry to cut interest rates because the economy is solid, inflation is receding, and even the labor market, that also stands tight. If you look at Asia Pacific markets, they opened largely lower this morning. But we will understand how India performs this week and what your trading strategy should be in the current market. So don't go anywhere. Plenty lined up in the show. Don't forget to post your stock related queries on our live feed and we will be addressing them before 9:30 a.m. with our market experts. Let's see. First up, let's take a quick look at the top headlines at this hour. The Nasdaq leads losses on Wall Street on Friday as key indices close in the red on concerns about Fed's rate cut path. Asia Pacific markets trade mixed this morning while GIFT Nifty is also pointing at a lower start for Indian markets. Crude prices register losses of nearly 5% last week. Brent crude dips to $71 per barrel on possible oversupply in the oil market. Gold prices also correct 4% last week as US dollar strengthens. Hero MotoCorp delivers a marginal beat on estimates in the second quarter. The management retains guidance in the range of 14 to 16%, while double-digit growth was also seen during the festive period. Chinese Premier Xi Jinping, after meeting outgoing Joe Biden, pledges to work with incoming President Trump to maintain US-China relations, also says that containing China is unwise, unacceptable, and bound to fail, and a stable relationship is critical for both the parties and the world. All right. So now last week we saw Sensex and Nifty, both of them extended losses to the second straight week. Both the indices fell over 2%, each dragged by metal, consumer and the PSU bank names. Nifty particularly, that has been trading around that 200 DMA levels. So we will be watching out if there is any sign of pullback in today's trading session. Well, the pre-open rates, that is pointing out to a positive start for the Indian equities, but we'll watch out if there is any sustainable moves throughout the trading session as well. Broader markets, if you look at the broader end of the markets, that ended in the green in the previous trading session, outperforming benchmark. So again, we'll be watching out for the BSE mid-cap and the small-cap indices. Now this week, markets will watch out how the elections in the Maharashtra pan out. Voting is on Wednesday, while the counting will be on the Saturday. Now that we are at the nearly an end of the Q2 earnings season, we'll watch out that if there is any further re-rating of stocks from here on. But the good news of the markets has been that the Brent is trading below the $72 per barrel. Bad news for India is the hardening of US Treasury yields and US dollar index reaching that one-year high. But moving on, let's take a look at some of the key figures that would set the tone of today's trading session. First up on your screen is the option queues data. If you look at the Nifty put call ratio, that rose to 0.88 levels from 0.7 levels in the previous session. So we can see that the bullish positions have been starting to firm up in the Indian markets. Second up, we can see the FNO ban list on your screen. That has no new additions, but some of the stocks that were retained that include your Aarti Industries, Aditya Birla Fashion and Retail, GNFC, Granules India and Hindustan Copper. And finally, your fund flows data. Once again, the FIIs continue to be net sellers in the previous trading session. They sold nearly 1,900 crore rupees in the cash markets. DIIs, however, they bought stocks which was worth nearly 2,500 crore rupees in the cash markets. So again, DII is doing the heavy lifting in this bearish market. But now just a couple of minutes before we take up the opening bell, but let's quickly get on board with our technical expert of the show, Sudeep Shah of SBI Securities. Sudeep, good morning. So good to have you on the show.
Good morning, Lovisha.
Sudeep, let me start off. You know, Nifty is trading near that 200 DMA level, and even the RSI is also pointing towards oversold conditions. So can we expect Nifty to see a dead cat bounce this week?
See, what we feel is that the overall trend, although it is on the downside, and this could even incrementally weaken from the current levels, because we know that in oversold zones, markets tend to stay for a longer period, not necessarily just because it is approaching an oversold zone. There should be a bounce back, but yes, post a 10% fall in the last several weeks. Exactly at the cusp of the 200-day exponential moving average, and with an event such as Maharashtra Assembly elections. So I guess all these things are coming together. So for the first couple of days till the elections are not out of the way, until the exit poll numbers are not out, I feel that the markets could continue staying in this range between say 23,400, 350 on the downside, and 23,700 on the upside. A bigger trigger could come post the exit poll numbers, and about 23,750, 23,800, we could see a bout of short covering from the current levels, because remember the long short ratio of the FIIs in index futures is around 22% right now, 22 to 23%. So along with the oversold market conditions, this particular data point is extremely crucial for to watch out for. And also, if you see all these other sectoral indices, whether it is the metals, or whether it is the banking or FMCG, all have fallen by 10 to 12% from higher levels, and all are below their key moving averages. So yes, while the overall chips are down, a dead cat bounce cannot be ruled out, say from the levels of 23,250, 23,300 zone. Now, why is this zone important? This zone is important because this is the 61.8% Fibonacci retracement of this entire up move from the 21,287 lows that we had witnessed on 4th of June, right from there to the all-time high of 26,277. So that is why this zone is very important, and we feel from this current levels, from this zone of 26 200 to 300 zone, 23 200 to 23 300 zone, we could see some kind of a pullback.
Okay, 23,300 zone we can see a pullback. But Sudeep, that you pointed out about Bank Nifty also has corrected, 10% from record peaks. It is above 400 points above that DMA levels. So what are the new levels that one can eye out this week for Bank Nifty index?
Bank Nifty, it has not yet retested its 100-day moving average. It is closer to 49,600, 49,700. So I feel there could be a possible retest of this zone, and then we could see some kind of a pullback. Because once Bank Nifty touches that zone of 46, say 49,700, Nifty would be closer to 23, 350, 23,400, and those are the zones which would be extremely crucial. So I feel these could act as an important support, but the real pullback in the banking index would be once Bank Nifty manages to cross and close above 51,000 on the upside. Because if you see the option data now, the highest open interest is around 50,500 and 51,000 strikes. So put together, if you put both these strikes together in the cumulative premium, I feel 51,000 now becomes an all the more it's an important level to watch out for on the upside.
Okay, all right. Sudeep, FMCG counter, that was one of the top underperformers last week. We've had some conversations, around how urban demand is slowing down. So what does the near-term hold for the Nifty FMCG index?
Lavina, see, Nifty FMCG index has corrected more than 10 to 12% from the higher levels. It is in tremendously oversold zone. What we feel is while the overall trend is on the downside, but it is very close to its important support zones, which are closer to 55,500, 55,300. So from here on, I feel that key stocks from these indices should be used to accumulate to play for a pullback rather than going short at the current levels, because the risk reward will not be in favor of those shorting at the current levels. But yes, from a pullback perspective, this could witness a pullback closer to 59,000, 58,500. So 4-5% pullback up to the 200-day moving average from a mean reversion perspective could quite be on the cards.
Okay, all right. Just, we have the first rates coming up on your screen for the opening bell. Let's see Nifty above that 23,500 mark for the opening rates. If you look at Sensex, that is also up flat in the green. It's above that 77,650 odd levels. If we look at some of the sectoral indices in the first rates, we have most of them popping in the green. Apart from Nifty IT and Nifty Private Bank Index, both of them have slipped. Like for example, if Nifty IT Index has slipped about 0.4%. But if you look at broader end of the markets, they are also holding well in the opening bell. Both of them, mid cap and small cap indices, up about 0.3% in the opening rates. Well, yes, Nifty, again, both the indices are still flat in the green. Nifty is above that 23,550 levels. India Wix, that has spiked up 8% in opening. It is above that 16 odd levels. Apart from that, we can see Nifty Metal Index doing well. Nifty Metal up about 1% in today's trading session. What is doing well in the metal counters has to be your Coal India, Hindalco, Jindal Steel, APL, Apollo and Gujarat Mineral. All of them doing well. Hindalco especially, 2% up in today's trading session. Apart from that, we can see Nifty FMCG once again after last week's losses, it is extending the losses to this week as well, down about 0.1% in today's trading session. If you look at some of the top gainers on the Nifty 50, of course, Hindalco, one of charting at the top of Nifty 50, up about 4% in today's trading. Apart from that, we can see Hero MotoCorp, Bharat Electronics, Coal India, NTPC, all of them doing well on the Nifty 50. Hero MotoCorp up about 3% after it came out with its, spectacular Q2 results as well. Brokerages are also quite positive on the counter. If you look at some of the top losers, what is not doing well is your Grasim. Grasim came out with 66% fall in Q2 profit and it is down by 1% in today's trading session. Dr. Reddy's, Infosys, Britannia, Axis Bank, all of them down in Nifty 50 losers list. But, let's take some stocks in focus. First up is Hero MotoCorp. Yes, of course, it is one of the top Nifty 50 gainers as well. Solid numbers coming in for the two-wheeler maker. We saw that the company's profit rose 6% Y-on-Y in Q2, while revenue also rose by Y-on-Y. Now, the management has said that they have concluded the festive season on a strong note with record retail sales as well. Sudeep, the stock after the September highs, Hero MotoCorp, that hasn't really performed well. Do you believe the next few sessions would be a positive one for Hero MotoCorp?
Yeah, two things are going right for the stock. One, the results which has come, they're just spectacular. That is the one word that we can use for these set of numbers. And after a lot of disappointing results, these numbers are like very refreshing. So I feel this could work in favor of the stock. And the second thing which is working in favor of the stock is that from higher levels, the stock has already corrected, say around 1,500, 1,600 rupees from 6,200 all the way till 4,600. So I guess 25-30% correction now it's done. And from here on, we could see some consolidation and a steady up move in this stock. So for those who are preferring a long-term or a short-term bet, could just watch out for this counter on the, say, between 4,700 and 4,800 where dips to these zones should be used to accumulate. And the overall, if you see 4,600 will act as a strong support until the time 4,600 is held. First level on the upside which could be witnessed here is 5,030, 5,050, which is the 200-day moving average. And there could be some resistance around this zone once this is retested. But above that, once again, a move up to 53, 5400. So I feel within the auto now, Hero MotoCorp could outperform in the next couple of sessions.
Okay, it can outperform in the next couple of sessions. Let's move on to next couple of stocks. We can see the city gas companies, Indraprastha Gas, Mahanagar Gas, all of them not doing well, down about 10% in today's trading session. Now, this down move has come about after their domestic gas allocation from the GAIL that was reduced in the range of 13 to 20%. Now, the cut marks second straight cut in the domestic allocation and it was earlier done by ONGC in October as well. Now, after this, Jefferies has come out with its report and has downgraded Mahanagar Gas to underperform, and it has also cut target price to 1,130 rupees per share. It has also downgraded Indraprastha to underperform from hold and slashed target price to 295 per share. Sudeep, city gas stocks, how do they hold on the charts? Because a lower domestic allocation could put some pressure on their margins as well.
Absolutely. I think you just you just said perfectly that in October also ONGC had done that and now GAIL has done. So while we see those charts in October also, it was a gap down opening on that day and followed by at least a 10 to 15% correction in the stock. Post that there was some pullback closer to 440 levels. But once again, this piece of news which has come from Gale now, with this, the stock is even broken down below the November 2023 swing lows, and we are at say 2-year lows for this stock. I feel the trend is firmly on the downside, and with these kind of regulatory changes which comes, the trend can what we are seeing in the last several months for these kind of stocks, whether it is IGL, MGL, or we could even discuss about IEX. So whenever there are regulatory changes coming in these kind of stocks, there is definitely a negative impact, and people are always apprehensive in buying these stocks even at lower levels, that you don't know what kind of regulatory changes would once again impact the stock. So I feel more along with the trend, it is the sentiment which has got hit, and from the current levels also. I feel that the stock is headed closer to 320, 300 levels on the downside, and on the upside, 390 would act as a stiff resistance. And even if it bounces back today, manages to just curtail its losses, but still, I would be apprehensive of adding this stock at lower levels.
Okay, all right. Let's straight dive into some of the viewer queries that is coming on our live feed. Well, first up is the viewer, Naveen is asking the view on Nalco. Nalco as a stock, Sudeep, it has come out with stellar Q2 performance. Net profit rose fivefold in Q2. But the stock, if you look at the 6 months charts, they have performed well, about 13% uptick. 1 month, of course, it has not performed well, given we have seen some weakness across the market as well. But what does the near term hold for Nalco?
The charts are very strong. If you see Nalco, this is one counter within the entire metal space that has outperformed and has withstood the downside that the entire metal index has witnessed. Because the way dollar index has strengthened, we have seen all the metal counters facing selling pressure from higher levels. And this is the only stock which is just 2 to 3% or 4% away from its recent swing highs. So the way the charts have stacked up, if you see the daily as well as the weekly charts, the stock is having a very strong formation. And from the current levels, also I feel till 227 holds, this stock could continue its up move up to 250 and beyond. Technically, on the daily chart, the stock is holding well above the 20-day exponential moving average, which is a very important short-term barometer. And I feel this stock is headed up to 248 to 255 in the coming few sessions.
Okay, so positive commentary coming in for Nalco. But we have another viewer query on Grasim Industries. Satya is asking on what is the best levels to add Grasim from a 1 to 2 years perspective. Grasim, it also came out with its dismal Q2 performance. We saw that lower cement realizations led to a profit drop by 66% year on year, while revenue rose moderately by 11% year on year in Q2. Sudeep, the stock has dropped over 7% in the past 1 month. Do you expect Grasim to witness a further underperformance from here on?
Yes, see, while his view is from a long-term perspective, the query is that can he add it from a long-term perspective? Yes. But whether at the current levels, my reply would be no, because I feel from the current levels, this stock could witness, say, a retest of 2350, 2400 levels also on the downside. Because this is the first retest of the 200-day moving average. Normally, stocks do not bounce big after retesting the 200-day moving averages, and they just try to even breach that by a few percentage points. So I feel the real entry point or a good entry point for this stock on dips could be closer to 2400 levels and up to 2350. I don't see it breaking 2350 any which ways, but yes, 2350 to 2450 could act as a good accumulation zone, and he could start adding on dips, because since the view is from a 1 to 2 year perspective, Grasim being a blue chip stock, I feel could outperform in the coming few quarters, because the results are not good this quarter. They have been dismal, but it will take a couple of quarters for the results also to revive. Neither of the Nifty companies have delivered good numbers, but the way we are anticipating the demand to improve from the current levels, it will take a few quarters for these numbers to improve. And once these numbers start improving, just before that, the stock prices also would, I guess, move before that.
Okay, all right. 2350, that is the zone that we need to watch out for Grasim Industries. But Satya is also asking his view on NCC from 1 to 2 years perspective. Sudeep, NCC, if we look at 6 months charts, the stock hasn't really performed well. Very moderate returns, and it has declined in the red as well. So what do we expect from 1 or 2 year or horizon?
In the short term, the stock has not performed, but the stock has had a fantastic last 24 months. If you see from almost 100 odd levels, or even lower than that, from that zone, the stock has moved to 360. Yes, that was a fast move, and the stock is now seeing a time-wise correction rather than a price-wise correction, because from higher levels, when a lot of good quality mid caps have also fallen 30, 40, 50% from higher levels in the last 1 month, this stock has just corrected by around 15 to 18%. So yes, from that perspective, from the overall perspective, the stock has outperformed. But from the extreme short term perspective, there is some kind of a profit booking that is being visible in this stock. So on the downside, the near term support now for the stock lies around 260, 255 levels. I guess those should hold for the current downfall. And from this zone, we could see some kind of a pullback, which could take the stock closer to 300, 310 levels. So the stock could be in a range between 255 and 310 levels for the next coming month.
Okay, all right. Let's move on to our next viewer query. Anune is asking that he has bought Trent at 7,025 and whether or not he should add more or average, or should he wait? What should he do at this point of time? Above Trent is still below what he bought at those levels, trading about that 64.28 odd levels. After the October highs, Sudeep, Trent has been in a downward spiral as well. So can we expect a further up move from here on?
I feel the stock could consolidate for the coming few weeks also, and it will not be an easy upside or a faster upside like the stock had witnessed for the entire 2024. While we are talking right now from December 2023, the stock was closer to 2,900 levels, and it moved all the way to 8,300, 8,400 levels. So that was a very fast move, and the stock is now witnessing some time-wise correction. And I feel it could still consolidate between 6,000 and 6,600 on in the coming few weeks. And only on a crossover above 6,600, 6,650 levels, we could see some kind of a short covering back to 7,000, 7,100 levels. So I feel in the near term, the stock could consolidate, and there are no signs of an immediate revival on any technical parameters from the current levels, and the results also have not been too exciting the last quarterly numbers. So that's the reason I feel there could be some consolidation that could be witnessed.
Achha, that's right. Some consolidation after its disappointing Q2 performance as well. All right. So let's move on to another viewer query that is on Ahluwalia contracts. Raj is asking, what is the view on Ahluwalia contracts? Ahluwalia contracts, if you look at 6 months charts, it has not performed well, declined about 24%, Sudeep. The Q2 performance was also not that great. Net profit we saw declining about that 24% year on year. So what is the near-term hold for Ahluwalia contracts?
Lavina, if we see the chart of Ahluwalia contracts, this is the biggest decline that the stock has witnessed in the last 3 years now. Generally, whenever there is a buy on dip candidate, we see that the rises are bigger and the intermediate profit booking falls are quite smaller compared to that, and those dips are bought into. But here, the stock has this is the biggest fall from 1,500 levels to 930, 932 levels currently. And the stock has broken its important swing lows of 1,000 zone, which was there in March 2024. So trading below those important swing support levels, I feel that the stock is now headed up to 850 and 830 zones on the downside. There is no respite from the selling pressure that we are witnessing in this counter, and no signs of a revival. So yes, overall 970, 975 zone now would act as an important resistance on the upside, and the stock could retest levels of 850, 830 on the downside.
Okay, all right. Let's move on to our next query that is coming in on Sula Wines. Praveen is asking, what should we do with Sula Wines? Sula Wines, Sudeep, the stock hasn't been doing well, be it from 6 months or YTD charts as well. Even the Q2 performance that we saw It didn't really perform well, be it your bottom line or top line. Both of them were quite, disappointing on that front. So what do we expect? Do we expect that the stock is going to extend the further underperformance from here on?
Absolutely, the stock could continue underperforming for the next several weeks because the results, the numbers have not been too great for this stock, and also the stock is now trading at a 18-month low. And every rises, even when the mid caps were outperforming for the entire March to May period in 2024, this stock was consistently witnessing a downward momentum, lower top, lower bottom formation was visible here. So I feel there is some kind of a serious profit booking which has happened in the stock, and I don't see a quick recovery here. So overall, 420, 425 zones will act as a resistance here, and on the downside, the stock could head up to 350, 360 levels also.
Okay, so quite a disappointing, commentary coming in for Sula Finance. But let's take in another stock in focus, that is your PTC Industries. The stock has been doing well today, up about 1% in today's trading session. It rolled out its Q2 performance, where we saw that the profit is more than doubled year on year in Q2, while revenue also rose strongly by 26% year on year. Sudeep, the past 3 months, of course, PTC Industries hasn't really performed well on the bosses. Do you believe that the Q2 will instill certain optimism on the stock?
See, despite these two numbers, the stock right now is trading around 165, 166 levels, which is very close to its important swing support zone for the entire 2024 time period. So for me, the most crucial number on the downside as a support would be 158 levels. And from a revival perspective, the stock has to cross and sustain above 175 levels, which is closer to the 20-day exponential moving average. So that could be the first sign that yes, the stock is making efforts to revive, and the trend could improve from the current levels. So until and unless 175 is not crossed on the upside, I would not go big bang. I won't be bullish on the stock, and it won't be a big bang move on the upside. So yes, 175 for me would be the most important level from a reversal perspective in PTC India.
All right, okay. Let's take a viewer query. Puneet is asking the view on clean science for long term. He's been holding at 900 levels since 2021. Clean science technology, it is above his buying levels, up about that 1285 levels. But 6 months it has not been performing well. What does the near term hold? Because we can see even the Q2 performance was also not that good for clean science technologies. What do you think, Sudeep? What does it look like on the charts?
It's a complete breakdown chart now. If you see, the stock was trading in a range closer to 1600, 1700, right from July up to first week of November. But in the last 7, 8 sessions, there has been completely a breakdown on the chart below 1500 levels. The stock has now fallen around 20% from those zones, and very close to its important swing supports for the entire 16 to 18 month time period. So there's no reversal signal here, and I feel till the time 1330, 1350 levels now does not cross, could retest further downside up to 1220, 1200 could not be ruled out. So yes, the immediate trend and the medium term trend is firmly on the downside, and I don't feel so that one should attempt for any recovery from the current levels. And if the buying price is still above any small reversal, also he should take out his money. He should book profits here and shift to some other stock, which is at least in an uptrend and where the fall has not been so steep, and the reversal could be a bit faster in those counters.
Okay, all right. Let's take one stock in focus. Of course, Honasa Consumer today down about 20% lower circuit. It has a 20% lower circuit in today's trading session. Well, the company reported quite a disappointing Q2 performance. It reported a net loss of 18 crore rupees in Q2, while revenue also dropped by 7% year on year. Brokerages also have been quite negative on the counter after the stock has hit 52-week low. Sudeep, Mamaearth not been a D Street favorite this year. You think what does it hold for the near term? Looks like the underperformance is expected to continue.
Absolutely. Now, if you see the last 1.5 to 2 months stock performance also, it was clearly in line with the profit booking that was witnessed in mid caps, and this zone of 365, 367, which it was holding in the last several sessions, was an important support zone because March 2024, the swing low also is closer to 360 level. And today's gap down open below those swing support now will intensify the selling pressure. And today it's in a downside circuit. And I feel in the next couple of days also this could increase, the pressure could increase on the downside. And levels of 225, 230 could be retested here.
All right. Just one last question before we let you go, Sudeep. What are your trading picks at this point of time? Uh, Sudeep, am I audible?
Yeah. Yeah. So there are a couple of stocks that look good from the current levels. One is Zomato. Now, Zomato in the last several sessions has seen some kind of decent buying from 245 to 50 levels, and the stock is trading at a highest level post 24th October. And we feel that from the current levels, Zomato could be bought with 263 as a stop loss and 235 as a target on the upside. The second stock that we like is Indian Hotels. Now, Indian Hotels also is outperforming in these kind of markets where a lot of mid caps are down 20-30%. The stock is almost at the highest level. So there's a serious relative outperformance here. The stock is trading above swing highs of September also, and even today post opening also, while we are seeing a lot of selling pressure in mid cap, the stock is holding well above 740 levels. So from the current levels, we feel 725 could act as a stop loss, and on the upside, 765, 770 levels could be witnessed.
Okay, Zomato and Indian Hotels coming in for you. But thank you, Sudeep. Thank you for taking out time and answering the viewer queries. Hopefully that we connect with you soon as well.
Thank you so much, Lavina.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Well, the sell-off has intensified. We saw the markets, Sensex and Nifty, both started in the green, but Sensex is down about that 300 odd points. Nifty is also down 100 points, trading below that 23 450 odd levels. If we look at most of the sectoral indices have been dipped into the red. Only Nifty Metal Index that is holding strong, up about 1% in today's trading session. India VIX has also spiked up. It is up about 5% in today's trading session. If you look at the broader end of the markets, that has also dipped into the negative territory. Both the mid-cap and small-cap indices have declined up to 1% in today's trading session. But yes, let's move on to the next guest of our show. We have Raj Vyas of Teji Mandi. Raj, good morning. So good to have you on the show. Raj, let's start off. When we last spoke, Nifty was down about 6% from the record peaks, but now the sell-off has
Correct.
intensified. Hello?
Yeah.
Okay, are you audible? Am I
So,
audible right now?
yeah, 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 you're audible.
Okay, all right. So, now it is like 10%. So, where do you see the markets headed from here on?
Yeah, so you pointed out correctly because last time when we met, we said that our view was clearly that we were in a some risk transition zone with markets likely to consolidate with a bearish bias. At that point of time, we were down 6%. Right now, we are down 10%. So the only reason we see is that it was uh, it was tough for the markets, especially who were on the bullish side. And there were three major reasons for the decline. So of course, there was a big FII selling that we are witnessing. Secondly, was the disappointed earning season. And thirdly, there was a bunch of stretched valuations. So because of these reasons, the markets were a bit in a volatile zone. And we think this is more like a tactical shift and not a strategic exit, as India's long-term growth story remains intact despite higher inflation, global macro uncertainty. So I think on a like personal level, as per the screen reading which we are seeing currently, so once this new FNO this thing comes in the picture, the markets will be then little stable, because at the end of this month the new FNO rules kicks in, and we move into the new financial this new calendar year. December is basically the last calendar year for FIAs. So we might see as they go into a holiday season, so we might see the selling spree that we are witnessing from the FIS, that will be limited, and post when they come in 2024, so 2025, sorry. So we might see some churning happening into new sectors. So that point of time, we might get the exact picture where the FIIs are bearish, and we may see the downfall which we are witnessing currently, that will be stabilized, and our views that market may touch new highs as well
Okay, market may touch new
after
highs.
the 10% correction that we have witnessed.
When do you expect that to happen? If you look at some of the timelines for market to reach new
You're not
highs.
audible correctly.
Hello, can you hear me?
You're not audible. Yeah, yeah, yeah.
No, I was saying that you said that the market is expected to reach new highs. So can you give me an estimate of the timeline? When do we expect that to happen?
Before our new financial year, like this financial FY25 ends, we might see new highs on the Nifty. That is our view. We may be wrong, but initially we have done our media interviews back end, and we were bullish on the market. We reached new highs. Then we were a little bit cautious on the market. We have seen that 10% correction as well in the markets as well. So given the kind of correction, like we see maybe 1 month will be max of consolidation from this point of view. Post that, when the new FII's money comes in, we have the domestic institutions that are buying, and we had our market has been quite stable, like given the kind of selling the FIs are doing. So we might see new highs, maybe like the this we end our FY25. So maybe at that point of time we might see some pullback in the markets.
Okay, all right. But Raj, we are seeing on the global front, we're seeing that the dollar is turning stronger, and even the US Treasury yields, that is, turning harder as well. So, what do you anticipate that does this mean, because a stronger dollar and a hardening of yields, both of them mean negative for India. But so does that mean that the FI sell-off is expected to intensify from here on, because we have the Trump economic policies that is also about to set in as we embark on the new calendar or financial year as well. So what do we expect on that front?
So I guess like post the Donald Trump winning the presidential election, we have seen dollar index rising like on a daily basis, and we have the higher yields as well. So that had a negative impact on the markets. But if you see, the Brent crude oil is around $72 per barrel, which is positive. So as we purchase more crude oil, and that crude oil being on a lower side, that is helpful, and it will help on the fiscal deficit side for the Indian economy. Other than that, on the sectoral basis, if we see, though the dollar index is rising, it may have a positive impact on the IT as well as the pharma side. So, IT as a sector, if you see, 7 out of the 8 times, the sector has actually outperformed post the US elections. And with the rising, and we are seeing the demand of IT companies improving, as we have seen in this quarter earnings. And some of the management has also, they have increased their guidance for full year as well. So on the positive side, we like IT sector currently, and it can have a positive impact on like as a whole for the sector. Other than this, if you talked about the Trump's policies, right? So one of the policies that everyone is talking about is the tariffs that they will be impacting. So what we see or we believe is that it can have a larger impact on the China side, because they have their other clashes with the respective countries. And India being the manufacturing hub currently, we are seeing many of the top companies, they are establishing their manufacturing unit over here, and they are producing their products over here. So we don't see a larger impact on India as a whole from the emerging market piece, because you see the demand over here is getting consumed. If they are producing over here, the labor is very cheap compared to any other emerging market. So we don't see any negative impact of the Trump policies on the Indian economy as a whole. We have seen last time as well, the markets has performed well during that period as well. And in this Trump 2.0 as well, we see Indian economy performing well.
Okay, all right. Raj, now that you shared about the IT sector, let's take banking sector in focus, because we had an earlier quarter that we saw troubles over deposit mobilization. But this September quarter, we saw certain stress over asset quality. So what does the next quarter hold for the banking sector? Can we see certain optimism on that front?
Yeah. So, if you see, PSUs have, on the banking side, PSUs have posted a strong financial result for the quarter gone by, showing good profitability, stable net interest margins, and they have also controlled their loan provisions as well. So, the loan growth is solid, driven mainly by the retail loans, the agri and small, medium-sized businesses, which we call as the RAM. Other than this, the credit to deposit ratio too is in a healthy range, meaning they are effective using deposits to issue loans. So operating expenses are expected to rise to a normal pace from here, as most of the major cuts are already dealt with. Also, if you see, PSU bank stocks have dropped from their recent highs. They are still trading at higher valuation compared to the historical average. And on the other hand, private banks are trading about their typical valuation with a return on equity at around 14.5%. So if you see on a 10-year horizon period, the valuations of this PSU banks are trading at the highest level. So till Thursday, if we see, the price to book value ratio is 1.6 times compared to the historical average of zero point 0.8 times. And on the other hand, the private banks, if you see, the typical valuation is around 2.4 times, but they are now trading at 1.5 times, given the recent corrections in the market. So we believe that the private banks could see stronger performance going forward compared to the this public sector banks.
Okay, okay, Raj. Wow, just one last question before we let you go, Raj. But what is the next catalyst of the markets? Because we discussed that the good news has been the Brent crude prices lowering, but the bad news has still been the stronger yields and a dollar as well. So, what can the market participants watch out as the next big triggers?
So the next big trigger, if you see the quarterly results, if you see the government capex was actually on the lower side, and it is down 17-18% in H1 FY25. So this was impacted by the Q1 the general elections which we had, and the soft and after that we had the coalition government. We have three parties together forming the government. So the government capex was on a limited side. So as you said, with the dollar index rising, yields rising, the only trigger which we believe right now that can support the market is the government capex rising, because I guess of the allocated capex, they have only utilized 35-37%, I guess. So we don't see the government utilizing all of the allocations that they have said, but maybe they can allocate higher. And if they allocate higher, then we might see the consumer staples, the infrastructure sector gaining traction, and that will help the overall economy and the company as well. So the
Okay.
government capex is the recent trigger that we are watching out for, and once the capex increases, we might see positive for the market.
Okay, the capex is something that we need to watch out for. But
Yeah.
yes, all right, Raj. With that, we have to let you go. But thank you so much for your time. We hope that we connect with you soon as well.
Thanks. Thank you.
Thanks. Okay, let's just take a quick check of the markets at this point of time. We can see that Sensex is still down about the 300 points. Nifty is below that 23,450 odd levels. If you look at most of the sectoral indices that have not been doing well, it has slipped in the negative territory. Only metal index is popping in the green. It is up about 1% in today's trading session. If you look at Nifty Bank and Nifty Auto Index, that has also recovered and it is up about 0.1% each. Apart from that, Nifty Realty Index is also up about 0.7%. If you look at broader end of the markets, they are not performing well. They're not holding out well. They have dipped into the negative territory, down about that 1% in today's trading session. But yes, Hero MotoCorp, that is one of the top Nifty 50 gainer, up about 4% in today's trading session. So we will watch out on what it has come to that. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed and what the stocks are in the focus. But until then, signing off, stay tuned to moneycontrol.com for all the news updates and market insights.